Anyway, can you guys hear me? Oh, some people are still out for lunch.
Yeah. Hey, Greg, I'm here. I hear you.
Okay, cool. So, the fact that we got these weeklies having held the low and the dailies with the moving averages pointing down, we've got these opposing forces. And eventually, yes, everything happens eventually. But if we can get up above this area, I think the momentum begins to pick up. And if it pulls back, I suspect the downside is limited and we have more chop going on. But we'll just have to see. We'll have to see. I put on one position during lunch and not doing a whole heck of a lot. I'm kind of anticipating here, shorting this OXY. It's a little extended, I think we would agree. And this sector is strong. And, I'm kind of looking for this to possibly, if this can get below the red line there, today's open, maybe it picks up some momentum. If you're willing to give it a stop above today's high, it's still fine to do. Hey, Eddie. The ideal scenario, and sometimes it just doesn't happen the ideal way. But you see how it's tried to get through these highs multiple times. It's up how many days in a row? It gapped up today, kind of an exhaustion gap in anticipation, and that it rolls over. And, oil has gotten weak. So I'm kind of putting those pieces together thinking, oil continues to pull back here. And I can't show you the futures because I don't get futures on TC2000, but I can see them on my other platform. They're approaching the lows from a couple of hours ago. So they're weak. So that supports that. But, no doubt this is a strong stock. I'm just thinking it should pull in if oil continues to weaken. And there's other stuff out there that is weaker. And so here's one that could be, a drop toward the lows of the day. I was looking at it here, thought it would, and I'm glad I didn't do it, but maybe I should have done it up here. I should do it, because this one gapped down and it hasn't been able to go higher. And, some of the things that I notice that are trading, they're kind of, just hanging there because the market is strong. And that does happen. Even, what's weak, there are days that have a tendency to hold up because the market is holding up. So there's more of a focus on what's long versus what's weak or can go lower. And that's why we always watch, the market and what it's doing.
Yeah, Greg, you can see I just killed that Boeing put spread. It's amazing that the stock went way the heck against us from our entry on Friday, and we still can get out break even right now. So I'd rather just hit the sidelines because I'm not as confident because the breakout failed in deep retracement, and I just rather get out, pay the commission, and get ready for a better setup. but that's me.
Okay. I mean, this is just another situation where you've got a weekly having pulled back to where it can move higher, and a daily in opposition, and it's just choppy. So it's a coin flip. So is there something to think that it would go down below here to 320? And it's a very difficult thing because, you could say, well, look at the prior day's bar. It was a big red bar. I would say, okay, look at the prior big red bar here. That went nowhere. And look at the gap down here that ended in a big red bar. And, overall, the markets are holding up pretty good today. And it's a situation, if it broke down below the prior day's low, well, that would certainly open the door to going down there. So will it do that? Nobody knows. Are you just risk adverse and eliminating it? That's another story. And it also comes back to, are you fully, into this situation, meaning full position, which also, in an uncertain period, if you are, you could eliminate half of the position.
Correct. Yeah. And thirdly, you can give it a little bit more breathing room because the market's bouncing right now. And just see what it does over the next, into the close. So transports still basing at the high. Those look great still.
Yeah, I didn't see anything in there that looked so great.
I wish the IYT, the ETF, was more liquid and we could trade that more often. It's just too darn spreading. Unless you want to just, day trade that. The ETF, I was talking about options on the ETF are too spreading.
Yeah. So we got some basing at the high here. They're just so quiet. Are they ready to do something? They've had decent range days today. The Delta turned around. It reported earnings, right? This day, I think it was.
Yeah, it gapped up on that earnings day. So,
yeah, right. So a lot of the airlines came back. They were looking pretty ugly. The mid caps are, well, percentage wise, everything's about the same. The transports are leading. Look at Office Depot, $2. Here's one that looks interesting, but it's been a laggard. The energy sector is ripped, and this thing's just starting to look like it could do something. This one's reporting earnings soon. This is when I got an alert on this morning, and it was down a bunch, so I left it alone. I wrote it down to come back to it, and it looks like it could be ripe now, if it'll get a little weaker, to roll back over. So if it doesn't continue grinding up here, if it comes back down to this 2434 area, I'm going to short that. And I'll tell you at the appropriate moment. Am I concerned that the market is showing strength? Yes, but this is showing relative weakness, and it's going to have to get weaker before I'll even consider it.
Our Google put spread did not trigger today, but it still looks poised for tomorrow.
What's Amazon look like? Still just inside day. Didn't do anything. It's a bit unusual. That SGH is a bit spready. 18-cent spread at the moment, which I did not look at earlier.
Yeah, look at that slob SLB, Greg, on the hourly. It's been lagging, so I hate buying a breakout in oil right now, but something got it moving.
It's right at the top of the range. That's a problem child, Dan, waiting to happen.
I know.
That's what Dan calls our trades that are not doing the desired thing.
Well, correct.
Greg, we have a problem child.
Well, so what do you think the casino calls somebody winning on a winning streak? He probably calls them the same thing.
They probably have more colorful words.
Probably. I agree. But when you're in the business of selling risk, then, you know, anytime we aren't making money and it's causing us financial, you know, we got to pay a claim. That's what it is, just like a car insurance company.
Mm-hmm.
So yeah, I'm just labeling them. We're dealing with a claim right now.
Well, considering this historically, as we've been watching it anyway, has been the relative weakness one. If the sector does start to give it up, I mean, it could be a good candidate for actually a bear call spread. If it forms a reversal up here.
Yeah.
I'm a little late on this one to consider an intraday short, but it just caught my eye. I don't like these for call spreads, Dan, and coming out of this consolidation up to the prior high, even though it's weak here.
AA. Wow, yeah, I remember when we were looking at those at the low.
XOP, XPO. Yeah, I've seen that before. Yeah, but totally different sector, but definitely on its own page. There was some other one in the shipping. I don't know if it was shipping and logistics and the transports that I saw before. Which one is it? No. Shipping and ports. KEX. Market is as quiet as a church mouse. It's forming its little range up here. Tesla showing a little weakness. I want to do that. I look at a bunch of 5-minute charts, and then, the way I have them set up, I know what they're doing on the hourly as well, whether they're weak there, but then I have to see how that relates to the daily chart. This really has, well, the risk to reward in this really isn't so bad. I mean, you'd be risking peanuts. And the downside is kind of peanuts, but I like the pattern. We trade options. Someone's asking me on YouTube every day. Options. As far as the intraday trades, this will be something new since we just opened up the chat room.
Yeah, I mean we sell options on expiration day all the time, but in terms of buying them for a swing trade, as long as you pick the right delta that you want, so at the money, delta of 50, you're going to not get paid as much for a move, but your risk is less. If you want to go, 80 in the money, then as long as it's liquid, so that's your biggest problem intraday is liquidity, because you don't want to give up too much getting in and out. But spiders are very liquid. I have no problem with that. If you want to day trade spiders, puts and calls long all day, I got no problem at all with that. Just trade, just trade liquid ones. That's all.
How do you know they're liquid, Dan?
Very little spread. So, I mean, just go look at Microsoft, Apple, spiders, the bid-ask spreads. Just look, right at the money, and they're tight. They're a penny to a few pennies. Whereas, look at that one. That's 20-cent wide. I mean, we would trade that doing a spread because we're getting the midpoint when we do a spread. But then there's, the majority really are illiquid, in my opinion. We have a favorite list of about 125. But of all the liquid stocks, I'd say there's about 1,500 liquid stocks. And trading options, we winnow that down to 1.25. And sometimes I am guilty of trading more illiquid ones, but I would only do it on a spread. And then, the pattern has to be fantastic.
So all of these in that white minder are liquid. There's only 47. So in this one over here, there's 427. I can be sure I'll probably find some less liquid ones there. Let's just look at the bottom of the list. That is definitely illiquid. I don't even know what it's doing in the list. It's just an optional stock, but 5-minute trades, at least 20,000 shares every 5 minutes. It's over $7. The 90-day volume's at least 250,000 shares, which is probably a little on the low side. And 350,000 is whatever. 20,000 shares every 5 minutes it's not a lot. That adjustment knocked off about 100. Still going to be some illiquid stuff in there. But this stuff, at the money, these option market makers are, I'd say they're close to being criminals, kind of like NASDAQ market makers were in the 90s with these spreads. And I would wonder if there's collusion, like it was proven to be with the NASDAQ market makers. I mean, look, here is MasterCard. I think that's it's a dime at 175. All right, the 170s down, the calls are 15-cent spread.
Yeah, and I mean, you also got to look at the price of the stock also. So for $173 stock, yeah, it's much wider than spiders, of course, but the spiders, millions of contracts are traded. But we would still trade. Yeah, Apple's very liquid.
That's a dime. That's a dime spread.
But you'll get filled at the midpoint.
But I don't know. They're options. It's so whatever. Now it's a nickel. But you would think something like Apple. Why wouldn't it have a penny spread, 2-penny spread?
Well, what strike are you on? Many times they do.
Well, 175 call. It's trading at 176.
Yeah, look at the go down to it's 162, 165. The 185's out of the money. See, those are a little tighter, but
yeah. So Netflix going to report after the close. I don't know where Yahoo come up with this 12 o'clock thing. We trade futures and stocks. Trade stocks all the time. I used to trade futures exclusively, but have not as of recently. Volatility was too low, but I thinking to start doing more of that. Just didn't make any sense to be trading. Well, I was not all futures. I was trading equity futures. You can be late, Dan. We don't punish here. Dan says collusion is not a crime. Conspiracy, on the other hand. Options on futures. I've never traded options on futures.
Yeah, I mean you can, but I why complicate it, and the spreads are greater. Just do it on the spiders, and again back to our 3 expiration dates during the week. It's just a marvelous benefit.
By the way, this is not an indicator per se on the bottom of the screen here on the 5-minute chart. It's just, this is a way that I found to be able to filter through volume in the stock to find options that are liquid. So what this is, if I remember correctly, I did this a long time ago. It's a 5-period moving average. This is a 5-period moving average of volume. And this is a 50-period moving average of that 5-period moving average. And in the scan, I have a level set. I forget which one it is. I'd have to go back and see what the level was that after scanning through many, many, many stocks, I found that if this was trading at a certain level, that the volume was sufficient enough that the options would be liquid. And that's how we come up with our list of stocks that are liquid. Like maybe have some lines in there. Let's find something that isn't so liquid. Oh, this is getting a lot of volume today, but I used to have lines on there. This is in that list, but look at this stock. This looks like new all-time highs. It is. This was a new issue back here in 2016.
Home.
oil stops trading now, or what, does it stop at 2 o'clock?
Yeah, two or 2:30.
The electronically, it still trades. I still see it's moving.
Right. Yeah, 2 or 2:30. The oil pits. 2:30, I think. Oil pits. But right, the pits. So then it's electronic.
Well, there's a 5-minute sell setup on it right now. Let's see if it rolls over. Everything is just sideways, pretty much slopping around. Maybe, John. We'll see. You know, something that I used to say years ago was that sometimes stocks go down because they don't go up, which on the surface sounds ridiculous. But when you figure, you know, a stock or a market could be holding up, you know, the majority of the day, and that creates expectations that they're going to continue to go higher. And when they don't, traders get nervous and sell. And sometimes that kind of feeds on itself, and then it'll drive prices lower. And, you know, in a wacky kind of a market, which this kind of is, that whole thing can totally go back in the other direction, and we're back up again tomorrow. And that is, you know, by some definition, a wacky, volatile, you know, market. Philip Morris had a good day today. Not my favorite pattern for a put spread, but
I like it. And then every time you say, "Oh, that's what's his cousin?" PM
MO.
Mighty Mo.
PM is Philip Morris.
Yeah. Could be a big old massive reverse head and shoulder on the daily, but it has to go sideways for a few more weeks. PM, we could do the 100. Yeah, only half of 1% for 11 days.
But then I know you're inclined to the credit spreads, but give me the plus and minus to a debit spread on PM.
Well, yes, I will, but let me first just back up. I'm not adverse to debit spreads at all. We just have analysis number one is it a swing trade because we want a directional, even if it's for 1 to 3 days? And then definitely that's the way to do it, is a bull call bull call debit spread, or if we aren't getting paid enough selling the out of the money call and we don't want to cap our gains, we're just buying in the money call or stock. So I'm not adverse to that at all. I'm just looking at the market right here and is in a coma going sideways with an extended hourly, but I'll put it on my watch list for tomorrow. So do you like that as a 1 to 3 day swing trade?
Right. Well, assuming that this market is really holding, and it is really holding. It's just been so jerky. Let's assume that it gets through the 50 MA tomorrow. That opens up the door to being able to go, I think, relatively higher, maybe who knows where, but we have some resistance here. But it does open up the door to, let's just look at, let's go to a 2-hour chart for the heck of it. So it's up against this high right here that is trying to get through. And we've got these other stopping points, and that's what makes for a choppy market. But, one of the things that, I look at is and consider to try and make some kind of, educated guess as to the direction is, well, what is that resistance against what has created this support here? So I just, as a general way, I look at it and I say, well, which one is the bigger? That one should be the stronger. And the support being the bigger of the two, my general assumption is that because of that, this move should be able to get through that. It'll probably stall, but it should be able to get through it and then continue higher. And then, of course, I look at what actually happens when it gets there. So you have to have a bias, and then you see what is real in the moment. And you adjust and you say, hey, if it's going and doing exactly what I thought, it's like, damn, I'm smart. And if it's not, then I'm like, don't say too much.
Then you blame it on me.
Sometimes. Anyway, so with that bias in mind, and then going and looking at Philip Morris, I look at this and I say, well, this already cleared the 50 MA. It's got a tradable void. Look at the way it came in. If I initiate, I don't think it's a call. And even though a call could make good money, I just look at this pattern and think to myself, I don't think that something like this is going to trend with momentum because it's not in an uptrend. And it definitely is today, right? But if a debit spread made sense that, say, over the next week and a half, that this might be able to move up, $4, would that make sense?
$4, that's 4% in a week. Are you kidding me? That's monstrous.
So I look at this chart and I think that that's a possibility based on my view of the market. And that's how we come to a trading decision as to saying, well, what do I think about this? What do I think about that? I look at the patterns, put these stuff together, place a bet, and find out, was I right or wrong?
So if we did a bull call debit spread, we could buy going 11 days out, because that's what I'd want for a swing trade. The $98 in the money call, and then we can sell a 106 out of the money call to help pay for it. and it gives us 20 cents of cushion. And what I mean by that is at expiration, it could go 20 cents against us, and that's our break even. And but we're capping our gains at 106. But see, I'm willing to do that for the benefits of this is only costing me $5 a share to put on. Mm-hmm. So on a 10 lot, that's $5,000. Whereas a 10 lot of this is, $51,500. Mm-hmm. Plus
here's the fly in this whole conversation that I just noticed. I'm just going to report earnings in a couple of days. Which, do you feel lucky?
No.
But it was a good conversation.
Exactly. No, we have a bull call on diagonal on the spiders right now. Mm-hmm. So I love directional trades with options, but I just I'm willing to cap my gains in exchange for having a cushion by selling a call around it, but we leg into them like we are doing with XLE, like we did with Halliburton, like we're doing with XOP. So you don't have to cap your gains on day one. If the chart is bullish on multiple time frames, let the little animal run for a couple of days and get tired.
Like a chihuahua?
And no, because I want a wild animal. So like a cheetah. How about that?
And not so small.
Yeah, but he'll get tired.
Things are getting a little weaker here. The market's just kind of hanging, but I see IBM giving a little up. Apple. And no, not a big deal for the banks, but intraday they came for this pretty aggressively. Look at that measured move there on BAC. And the daily chart is nothing to get excited about for sure. I guess this is reporting after the close.
BAC was pre-market.
Oh, okay. Gapped and crapped and came all the way back.
Greg, I was trying to paste a chart in the Zoom. It's not letting me.
I didn't even know that you could paste a chart into Zoom.
Well, that's what I'm saying. It won't let me.
Where do you see something that even suggests it'll do that?
Because in any chat I try, Telegram, WhatsApp, I paste it, and if it takes it,
I do it. True, Dan. I mean, those are different chats than an actual webinar chat room type of thing. Even when we used Omnovia, you couldn't paste a chart in the room. You had to display it.
Right. So that's what I just learned. But it didn't stop me from trying.
Good job. I've used a lot of chat platforms over the years. By the way, if anybody coming into the room or didn't get email, we'll be doing this webinar with Top Step Trader this afternoon. Do I plan to trade equity futures intraday after some days in the green room? I think so. I mean, look, I've got the tools to do it. I did it for years. My only hesitancy is, you know, trying to do too much. Someone's asking me on YouTube, you know. And honestly, I like limiting my focus. I mean, the scans that I've created in TC2000 enable me to look at a lot relatively fast. But when I just traded futures, I liked that. Meaning, you know, I focused on a few market internals, 3 contracts, the S&Ps, the NASDAQ, and the Dow. And that was it. No scanning. I'd say something else is that, well, look, trading futures, you don't need to have a smaller account, but because of the pattern day trader rule, they do offer the leverage to be able to trade a smaller account. Yeah, John, just look at the chart. Just look at the charts that I'm displaying. That date in the upper left-hand corner is the earnings date. And you can see here in this minder right here, I have the earnings dates, which I can sort by that to see what's going to report earnings. But what I was going to say is there's no instrument that is the best instrument to trade consistently. It's about whatever is liquid and trending. And some of you that have been around a while, you know the story why I started trading futures after trading stocks for many years. Stocks were beaten down into single digits, you know, after the bear market of 2000 into 2001 and 2002. Decimalization, the technology was such that you know, they moved the technology to where people could split the penny. It was like you were like ready to high five, you know, because you made a dime. That freaking thing moved a dime. It was ridiculous. So I started trading futures, which was like, hey, this is fantastic. Why didn't I do this before? Well, because the stocks were doing great. You know, mid-90s, 1999, internet stocks. Why would you want to trade anything else? And then eventually volatility contracted so much that it's like, who the hell would want to trade equity futures? Like banging your head against cement trying to make money because they didn't move. Oh, I miss what you said. How do you get the earnings date to display? Yes, you just right click over here and edit your toolbar and just add the little plus here and you find earnings date, which is somewhere in this list. Next earnings, so under N. Maybe it's not in the list because I have it here, but that's how you do it. One second, guys. All right. So, yeah, I can't say enough about this software as far as making the job easier to do and get certain information that you want to look at. Scan for it. You know, I'm not a programmer, but I can put together some decent scans, not, you know, high-end complicated stuff, but I don't need that. You know, whereas if I try to do the same thing in eSignal, which I use, that's what I'm showing first thing in the morning when I do the market review. And that's what I'm, you know, I do my trades off of, that's connected to IB. You know, that language to do that, I can't do that. The things that I've had there, I pay a programmer to do it. And easy language, forget that too. I don't know how to do that. I don't want to learn. So this is simple. Some of the stuff that I don't want to do, I go on their forum, I search it, find out, and they have people that'll answer questions, and they'll give you the formula that you want. Yeah, me too. I don't know if it's been 20 years, but probably something close to that. Been using it. It used to be just a DOS-based program that, who knows, maybe the engine underneath the hood here still is based on what it was so many years ago. It does look somewhat different and works differently, but some of the things look the same. I think before I got that call, it was actually Kevin from Top Step, I guess, just to check with me that I was remembered to show up. But if you don't have anything to do, we're going to be doing this webinar, or they're going to be doing it. I'm going to, since I invited everyone, I'll say a few words and then hand it over to him. Okay, we got a red 5-minute bar in the oil futures here, and they're in a downtrend. They had a deeper retracement. I can't show you those here, but it's probably relatively close. Yeah, same moving averages, and it looks something like that. Futures look a bit cleaner, but if this would roll over, and I don't think I'm going to hold this OXY overnight, but I'd love to see it drop and make a few bucks out of it. Right now, it's just flat. So if you weren't in here before, I shorted this, and you say, oh, why'd you short that? Look at the 5-minute chart. Well, I was kind of anticipating, not always the best thing to do, but it gapped up today and it was hanging here and hadn't been able to get through here. And I thought, well, maybe this will roll over. And it just hasn't done it.
Wow, Greg, look at your WD-40. Yeah, I think it was John or Thomas. Somebody said that the reason it's acting so well is because we need the oil for all the robots that they're making in business now. That made sense to me.
Whatever reason he would have said, I would have agreed because it's going up.
That's what I said. Yeah, that's our take too. Over 134.50. So we almost had a $2 gain.
And this is all-time highs. It's amazing. You say, oh, why would something that just squirts oil, with some lubricant that you squirt in your door jamb or rusty bolts or whatever?
Well, no, I hear what you're saying, but I'm sure that's just the name. If you go to Yahoo Finance, here, I'll do it, and let me post a description, because you know darn well they do a lot more than that. So then you go to profile. Oh, well, here's why. They offer automatic toilet bowl cleaner also.
Of course. Should have known.
Aerosol carpet stain removers. I mean, they're all over the place. Look at it. That's too long for me to read. I'll just go with the robot story. That one has the best appeal. So move stop today's low. Good with that?
Yes, of course.
Beautiful wide range bar.
Where's the volume?
Yeah, that's a good point.
Now, look at this. I don't know if they're exactly the same sector, but of oil. This will tell us what it is. So energy, oil, and gas, which has been stronger than just oil as of late. But the NOV that I mentioned, what is that? Oil and gas, equipment and services.
Yeah.
EP, whatever that is. Maybe that, I don't think that's the same, but NOV. Yeah, on the 5 minute. This is why you go pick on the weakling to kick sand in his eyes rather than the guy with the muscles. XOXY is hanging up there, and this thing is, just grinding its way down to the low. But I decided to get cute, anticipating, maybe thinking a little too much that this would roll over. It's getting a little late in the day.
You're still in that short?
Yeah.
I mean, when it does crack, we can sell a Friday call spread.
I appreciate your confidence, Dan.
Yeah. Well, it ain't cracked. It's resting. It's hibernating.
Yeah, well.
Like that cheetah. Cheetah ran for 5 days, and now he's napping.
Mm-hmm. Vince sent a question to the Q&A, and guys, the general chat is open to everyone, so you can post theirs. But Vince asked me, which scans do you use every day? I pretty much, well, I can't say I use them all every day, but of course, what I'm showing you here, I look at what the markets are doing and sectors within the market, and I'll look at, what is performing and within that sector. So as I click on that, it shows me which stocks are in the sector. I look at what's gapping. And so this is my gap page with the scans that I've created. And these don't usually fill too much in. You can see actually there was nothing here that gapped below the low of a green wide range bar. And over here we had a few gapping above the high of a wide range red bar. Didn't go very far, so we start here, and this one gapped up. So there's scans are starting points. Now these are, gap ups, gap downs based on some simple criteria. And these are lower price stocks that are gapping. Now here, I look for stocks that are trending up or down intraday. And we'll go to these at night, sometimes during the day, but wide range bars, bottoming tails, topping tails, 180 reversals, so things that have turned and moving. These are daily trending scans. So based on certain criteria, and then I can sort these. So I can sort them by volume, what's trending. And so these will be uptrends. Now, it doesn't mean you're going to find something you like, but it's in an uptrend. These are downtrends. And this is where I find credit spreads if I don't find them in other places, meaning, is it a simple scan? It is simple. You just put together a wide range bar, open above the high. And then, of course, you add volume, add price criteria. I can show you the scan. And for those that have purchased the gap course that's on the site, I give it to you. And Dan and I had discussion. Look, this week, we had last week, most of last week was, open door, come on in. This week is open door, come on in. Next week, you want to be in the room, you can pay the monthly thing, and it's, I think, pretty low price. If you're a subscriber to a letter and such, you get it at a discount. So if you join the room, I'll give you the scans. And the only thing we ask in return is that you help scan and help find ideas so we can all make money with them. Pam saying, are you able to conduct all those scan apps? Yes, I'm showing you in one platform. And I'll tell you, Pam, this platform will scan whatever I ask it to scan in the blink of an eye. And if you've used other platforms to do such things, you know what it can take. This is a relatively fast computer, and my internet is top of the line and all of that stuff. But I mean, even if you had just regular whatever, this thing's going to scan this stuff fast. So MBT Master Trader bases. So this particular one, it has to be basing on a daily and a weekly time frame. And so then I find things that are basing. And then I was like, whoa, it's reporting earnings tomorrow, so no good. And I just go through this. And so you can see these are relatively flat basing type of situations. And I see what I can find. And I don't set some of these scans up, most of them. I don't set this one up particular to find me the perfect, ideal, tight base. I don't want that, especially when I'm looking for credit spreads, because it could wide is actually a little better. If I can catch the turning point, then it's going back down. So the only thing I haven't really perfected the way I would really like is my climactics. And okay, before I get to that, I got weekly wide range bars, monthly wide range bars. I've got my market internals here. Jones, is silver enough? If silver is like their subscription for end of day, it'll definitely work on all the end of day scans. But I don't believe silver has intraday data. So the gaps probably wouldn't work. And, but I mean, it's for end of day swings and all that. Yes. If that silver is that, just end of day scans. So this is the gold. I used to be platinum, but then they told me the difference was instead of being able to have 100 alerts, you can have, I don't know, whatever many alerts, and that the scans were updating continuously. But all I have to do is change the page or hit the button and it'll update. I don't need the scans to be running constantly. So the difference was, I don't know, I think it was like $500 a year instead of $900 a year. I was like, man, I'll just press the button for $400. I didn't need it to do that. But I got my market internals. And the climactics, I have to work on to get them a bit better. I mean, they're not bad, but so here, my climactic cells, that's actually pretty good. So this is, I have to keep an eye on that, looking for the turn to actually happen. And that one's just getting started, but I have to do a little work to get them to where I could say I want it to be more like this one, where it's multiple bars with higher high, higher low bars in a row. And the thing, with the gold is that I can tell it to find this, right, which I have set up. In part of the scan, I'm still tweaking it. In part of this scan, where I've got it working, move it up, I want to add to it that I want the 5-minute doing the same. So I can do a combination of time frames within the scan to kind of, for an intraday, I can get it to do what I want. So there's lots of possibilities you can do here. And then, of course, I've got my ETFs.
So, Greg, when you scan on your telephone, do you just have two or three go-tos, or you just have access to the whole darn thing and go wherever you want?
I can access the whole darn thing. Of course, these pages being kind of big, it's limited. But yeah, I can access from my phone. I don't do much on my phone, of course, only when you and I go somewhere and you say, Greg, we need a play.
Yeah, Greg saw me trading. I have Thinkorswim. Greg saw me trading on my cell phone on the way to Orlando.
So this Occidental Petroleum Pet, whatever. Looks like market's going to close in 10 minutes. I'm probably going to kill this thing, break even plus or minus a little bit. But if this gaps down tomorrow, it will be on our short bait list.
Yeah, look at those railroad track moving averages on the hourly. Wow. Wow.
Earnings tomorrow. This isn't everything, just in the S&P 500. You can see, we've got a pretty good lineup. Schwab, CXX, Johnson & Johnson, UNH, IBM, Goldman Sachs, an airline, UAL, semiconductors, and so on. And in the Qs, not too much. Why CXS in the Qs? Not too much. Interesting. And the Dow got a few. So we got some heavy hitters, but you get real-time data. Yes, all right, you get real-time data. That's, I don't know if this shows you gold, but I can show you, my profile, services. So real-time options data. This is just to get the Dow, so I can get the Dow chart. Yeah, gold, $29.99 a month. Plus the real-time data. And they have a brokerage firm now. I don't use it, so I can't say one way or another about them. But it seems that they're primarily focused on options trading. I didn't check the transports. Well, same CXS and UAL. So pretty much covered what it'll be reporting. And it'll pick up going forward.
Well, Facebook 4 days is holding the upper part of that wide range bar. Now the wide range bar was his first day of Well, I thought it was his testimony day. Maybe it was the day before. I forget.
That's the link to that webinar if you guys want to attend. We're starting at 4:30. I don't know what news is there. Any news coming tomorrow? I don't think this was a big news week. I think there's Fed minutes on Wednesday. I mean, it's just basically earnings.
Well, we'll get to play with Netflix tomorrow. And Goldman, Northern Trust, United Health.
Yeah, building permits. Who pays attention to that? I guess LEN will.
Builders.
Housing starts at 8:30. Oh, the Dow, I don't know if this is that might be delayed a little bit. I'm not sure, or maybe it isn't. This is just the Dow. I'm not sure if they give you that real time. I know I pay an extra buck just to see the chart on this platform, which is ridiculous. But in any event, up on the day, but it says it's below its opening price. Well, it's just a red bar, but that doesn't make any sense. So here's the opening price, and it's up here. Why is that bar red?
Wow, because it's above the open.
Right. open versus close. Doesn't make sense. Yeah. So pretty much a go nowhere day for the most part. You know, the gap up was majority of the gain here from wherever it's going to close in the next minute. Now, here's one thing that's a little strange about this platform, if you guys consider using it. And it's the only platform that I know that does it. And I'm not saying it's a good thing. I'm not sure. From one perspective, I don't think it is, because I don't think anybody else does it. Is that a weekly chart is based on the most recent 5 days versus starting a new bar. So every time frame is based on the most recent bars, which makes sense with every other thing. A 5-minute chart is whatever, 5 minutes. But a weekly chart is based on the most recent 5 bars. I asked them about that years ago. They said, it's just how we do it. You don't like it? Go somewhere else.
But have you found that it gives you any different decision making for trading?
Well, I discount it, meaning, I know what it is. So, based on a weekly chart, the current bar isn't something that, I look at it as being factual. So, I mean, when I look at the weekly, it's just, is it an uptrend, downtrend, sideways trend? And, where it is in relation to support and resistance. You think changing on net change? Oh, look, now it's different. Maybe it updated. No. Well, it depends, Pam, on what we were compared to Realtek. So if you ask me, is TC2000 superior to Realtek charting? I'd say not in a million years. It's been the best charts there is forever. I mean, nice looking charts. As far as scanning ability, TC2000 wins it hands down. As far as ability in a top-down approach to the markets, as to, the broader market indices, sectors, stocks within those sectors, and the ability for the platform to break that down for me, TC2000, hands down. Trading with it, I've never traded with it, but Realtek has hotkey setups that are beyond anything that I could want to do. So Realtek has that hands down. Realtek was built primarily for institutional traders. It's got a lot of bells and whistles for that most people will never use. Probably most institutions won't use. So it has some pretty fancy stuff in there. But it depends on what you want. But something like this, Realtek, if you're trading somewhere and you're doing enough trades, you can get Realtek for free. But on a monthly fee, Realtek is like $250, $275 a month. And that's just for charting. And Realtek, well, Realtic was funny. You know, when I had the brokerage firm and we offered Realtic, as you know, Realtic was a little bit of a mafia in a sense, you know, and I don't mean like a real mafia, but I had to, at that time, for me to provide Realtic, I had to guarantee to pay them $50,000 a month for so many licenses, whether I used them or not. Luckily, I used them. So I covered that cost. But in addition to that, when I first started out, they would tag on $1 a trade on top of that. I mean, eventually, as you know, the volume got up. I think I got that down to 50 cents a trade, but they're collecting the money for, you know, the platform plus the execution. And then you had your, you know, your fee, your commission fee. So when Master Trader was a brokerage firm, right? And whatever the commissions were that we were charging, some of that had to go to Realtic on top of the platform fee. I use eSignal, and I've used eSignal. I use Realtic and eSignal side by side for a lot of years. But I've used eSignal probably for between 15 and 20 years. And I like it, you know. Realtic has some, you know, they have great charts and some good stuff, but, you know, if I had to choose between Realtic and eSignal, I would choose eSignal. And I've used them both for a long time. All right, guys, I got to get ready for this this webinar, which I'm just going to be doing a little introduction, and then Kevin from Top Step will be taking over. So if you want to join, terrific. If not, hopefully we see you in the morning. Yeah, Realtic wasn't good for scanning. Yep, PPSN. Pan, believe it or not, and maybe you know this, but there is still a website with PPSN on it that updates. I haven't looked in a few months, but I can provide you the link. So, all right, everybody, we will talk in the morning. Let's see if this, let's see if this market can get moving one way or the other. All right, we'll talk in the morning. Have a great night.